Well, you can see in the lecture.
Yeah.
Bueller.
Hi, everybody. Welcome to the mid-afternoon show. I want to get an idea of who's in the room. So, aspiring musicians or writers or creators, raise your hand. Okay, we got a few. He's aspiring. How about people that are involved with the record industry already or the music industry on some basis or another? Okay, we got a few. And any lawyers or venture capitalists or whatever? Okay, great. Just get an idea of what we have. We have a very esteemed panel here this afternoon. I'm delighted to introduce who they are, starting with Jeff Warshaw, who's on the far end and a renowned Westport resident and the CEO of Connoisseur Media. And next to him is Tiffany. I'm going to let them tell you a little bit more about themselves. Tiffany Almy, who's the founder of PKA Law out of Brooklyn, New York. Sam Hendel, another local resident and a man of many capabilities and a lot of history from Chord Music Partners. David Boxenbaum, who's now also a Westport resident after living in New York for so many years. Newport Media Partners. And Shep Goodman, writer, producer, and musician from well, not too far from here, right? So welcome to you all. Actually, let's start with you, Shep. Tell us a little bit about your journey and what you're doing right now.
Shep Goodman, like he mentioned, I'm primarily a songwriter, producer, and over the years I've kind of pivoted into a bunch of different things. I've worn the hat as a manager. I was vice president of A&R at a major label, have my own label, and started and kind of successfully broke some artists. And then my COVID.
Be humble. Name check some artists.
No, I can't look at, well.
Yeah.
Come on.
Well, I mean, I've worked with a bunch of different people. The artist that there is on my label initially was a band called American Authors, and we had a couple of hits with them. One was a song called Best Day of My Life, which went on to be a ginormous global smash. So that's kind of, I've also worked with other people, Rob Thomas and Hall & Oates, Ingrid Michaelson, a bunch of different pop artists over the years. My COVID pivot was sitting at home getting into tech. So the strangest thing is that we started realizing these pain points of all this independent music coming out and no label admin services for all these independently released records. And we managed some producers, and you look back and you go, they've put out 50 songs through 17 different independent distributors with producer deals directly with the artists who aren't on labels, and some of them are doing well, some of them are doing amazing, some of them are limping their way into millions and millions of streams, and nobody's paying for it. So we built a tech platform, which is basically a multi-aggregator of revenue sources, and it's fully automated to pay out all those royalties and stuff. So that's where we're at.
Right, thanks, Shep. David.
Hi, I'm David Boxenbaum. I had an unconventional start. I started in the corporate world. I went to business school, worked at PricewaterhouseCoopers doing consulting for entertainment and media companies, thought I worked for Universal Music Group and said, hey, I think there's some opportunities. So with a partner, started Octone Records, signed and developed several platinum artists, including Maroon 5, started a publishing company, a merch company, sold that company to Universal Music Group, and then I launched and ran the international company for Avex, which is the largest music company in Japan, bought some music catalogs, bought a management company, signed Bruno Mars and Burt Bacharach to publishing, produced some Broadway shows, led our venture investing in music tech, and now what I've been really spent my time split, about 50% of my time doing private equity around music tech, really a lot of what Shep was talking about how to better monetize existing consumption, and then the other half of my time around more artist-related projects.
Sam?
So I'm actually quite accidentally in the music industry. About 2 years ago, I put together a deal to purchase a very large catalog. I was friendly with the founder of a company called Cobalt, and they had a large catalog that was off balance sheet from their regular publishing business. And with separate investors, and those investors wanted to sell. So I ended up getting exclusivity there, putting that deal together. We partnered with KKR, and that catalog owns Stevie Nicks' music, both solo and with Fleetwood Mac, The Weeknd, Kid Cudi. We have American authors recently. We purchased that catalog last year, and it's one of the larger catalogs in the world, sort of the larger independent catalogs. And then we did another deal to purchase a very separate deal to purchase Cobalt's operating business, which is the leading independent publisher. Have been very active also in investing in early stage music technology businesses around AI, around music gifting, around really human discovery and curation. And then he started a new company really related to the first deal when the deal we did was we paid $1.1 billion for this large asset, and I obviously didn't have that and needed to partner with big private equity. But our view then was that the right owner of a lot of this music was the fans, and if we could find a way through technology to democratize the asset class. So I started a new company called Jukebox. Have a great management team running it. I'm sporting some Jukebox gear here, but we're taking songs like Landslide by Stevie Nicks or Blinding Lights by The Weeknd, slicing that up into thousands of pieces and issuing it as a regulated security to the public so that anyone can own a piece of their favorite music.
Hello, I'm Tiffany Almy. I'm a music attorney. I started I'm a drummer, actually. That's how I got into music originally and realized how gross that was, getting in a tour van with a bunch of dudes, and realized that I could help other people by going to law school and doing this. So I've been doing this for about 15 years, and 20 years, sorry, and represent mostly talent, very diverse roster of artists. And my whole goal is to set everyone up for the most optimal success, depending on, helping them build out their team, which is really important. And every single client is different, so you can't just, it used to be you just did the label deal and the publishing deal, and then you waited 6 years and that was it. Now it's, like Shep was saying, multiple, agreements with multiple distributors, or finding the right, not even being published necessarily, or having non-exclusive deals across different, revenue streams so that you can optimize that. So that's what I try to focus on in my career. Nice to meet everybody.
Thank you. Hi, I'm Jeff Warshaw, Connoisseur Media. I'm thinking about, like, you guys probably have all your favorite music stories. You'll be able to say you saw this group in this venue, and you'll be able to tell your kids about that. I've been in the radio business. I built my first radio station when I was a sophomore in college, and I guess owned many radio stations. Now my company in this area owns Star 99.9, Weeby 108, WPLR, the Fox, WICC, so essentially all the radio stations in Fairfield County, and we're very proud to make this our home base. I've also been in the music business. I lost a lot of money in the record business, so I'm anxious to hear how to not lose money in the record business. And anyway, I'm happy to be here. Thanks.
Thanks everybody. So I thought we'd start today, a lot of us have been in the music industry long enough to have experienced the highs of the late 90s and the CD era, when money was flowing like water, and then also living through the big downturn, the sort of nuclear winter of the music industry that was triggered by file sharing and Napster, and just the collapse of the public markets at the same time. And we've been fortunate enough to now live through 10 years of basically growth again from the bottom, which was around, I don't know, 2011 or 12 or something like that. And now there's, with streaming and music subscription services, there's over 600 million paid music subscribers, which is an extraordinary number. And it's led to a lot of music catalogs being bought and sold, both master recordings and the underlying copyrights. To every song, for those who don't know, there's two rights. There's the right to the master recording, which is the record company, and the right to the underlying composition, which is owned by the writer and or his music publisher. And there's these big transactions that have made a lot of news, of which Sam has been a part of, for hundreds of millions of dollars, that include Bruce Springsteen and Paul Simon and Bob Dylan and many others. So Sam, tell us, what's driving this and why now?
Sure. So, and this is going back to what music was, the purchasing, how we purchased music back 20, 30 years ago. We would buy an LP, we would buy a CD, and once we made that purchase, we owned that music and we could listen to it whenever we wanted, but there was no resale. Streaming has really changed the game for music and has been a huge boost to the industry. And so every year these songs get listened to over and over again, and the way the industry is paying out, it's paid based on market share. So instead of having this one-time sale, you have this recurring revenue coming from streaming. Every year when someone listens to One Republic or Maroon 5, whoever owns those, the master recording or the publishing, gets paid year in and year out. And it's much easier for the financial markets, for the private equity firms, for the labels, to be able to value these types of assets. So the multiple has gone up. The revenue streams have become much more consistent. And every year what happens with new music, a song comes out and does very well, and then the next year it does worse and does worse. It's really a decay curve. Song does great, goes up, and then loses market share over a certain period of time, flattens out, and then starts going up. Really what you have here is that the market share of a song typically loses every year because you have new music coming in, but the size of the pie is increasing. And as Dick mentioned, there are over 600 million subscribers worldwide. The number of subscribers is growing. Emerging markets are growing very quickly. The industry is doing a better job of capturing who's listening to what and when through technology. And it's right now it's a $35 billion industry. It's still about 15 billion away from where it was in the 90s. And I think the markets are expecting a lot more growth from music, and you have this very consistent stream that you can finance, you can see what it is, you can get the credit markets going, and really have built a lot of capital, and it's become an institutional asset class.
So talk about the decision from the artist's or writer's perspective. What are the things that they are considering when they're considering the liquidity of their life's work?
Yeah, you've had, obviously there have been some big splashy announcements, Bob Dylan, Bruce Springsteen, but you're seeing many younger artists who are selling their catalogs. We purchased Ryan Tedder, the lead singer of One Republic. We purchased his catalog a couple of years ago. Justin Bieber just sold his catalog to a company called Hypnosis. We just bought a 32-year-old's catalog. An artist called Flume, who's a well-known Australian DJ, just sold his catalog. So what's going into that? A lot of it's tax. These artists are getting their royalties and they're paying ordinary income every year. But if you sell it to a private equity firm, you pay capital gains tax. And that obviously, big difference between ordinary income and capital gains is driving a lot of that. I think there's also a view, you have multiples at historic highs. The industry is doing very well. And what a lot of the younger artists are doing, they are selling their catalog and then they're building new catalog. And they're having a big liquidity event for themselves and then continuing to produce, continuing to tour. And it's a great way in this market to take a little off the table.
Yeah, and I'm guessing that a lot of the older artists are, they want to start retiring from touring And it's generational wealth, right? That they want to get in there, inside their house, as it were. Before Tiffany, it looked like you had something to say.
I was just gonna say, it seems and everything's for sale now, literally everything, and you can do it in whole and in part and in pieces, and you can do it for a short period of time, and you can get your rights back later, or you can. There's just so many ways to do this now, and even, one of my clients is a composer, and he's in his 7th season of a show on ABC, and it's going to be syndicated. So we're contemplating selling the writer's share of performance income and getting, like the payout now rather than him getting paid through. So literally everything's for sale. And the only thing that I, have to think about with my artists is when you're selling masters, that's your art, that's your artistry, that's your project, that's your, so you're selling it to a company that is not a music company. I made that mistake. I think it was a mistake, honestly, because they don't know what to do with it. They don't understand how to even pay out the royalties. They don't understand. It's like, when you sell it, it's gone, so you don't even have approval rights sometimes. The good news is if you write your compositions, you still have approval rights on that side of things, so you can still block, syncs that you don't want to happen, but there's definitely, I think going forward, if I'm selling a master catalog, I would sell it to a company, like a music company that knows what they're doing.
You bring up a good point, because there are different kinds of companies in terms of acquisition as to how active or passive they are managing that catalog that they're buying. So there's new companies like, relatively new companies like Hypnosis, which is very, very active in working the catalogs they buy to get the syncs, to get the placements in television and advertising and all the other negotiated licenses. One that comes to mind, there's a company called Primary Wave. It's a great company that really focuses on, they're really hands-on. And I read that they bought the Whitney Houston catalog rights, and they have quadrupled the revenue in 3 years that the family could never possibly have done on their own. So that's a really terrific example of active catalog management. David, music is cyclical. We talked about that just a minute ago, right? We're at a high right now, and hopefully going a lot higher. We've seen this, but we've seen this before. We've seen the highs and lows. And while music subscriptions are now up to 600 million, the rate of growth has actually started to slow. Where do you think that the new growth is going to come from?
Well, actually, the news on streaming, and I'm not saying it's a doomsayer, is worse than that. So, if you think about the biggest music markets in the world, U.S., Canada, UK, et cetera, the revenue per user on a premium subscription is about $6 a month. That's good money, but there's no growth left. Like all those markets, it's flat. All the growth is coming from users in mostly developing markets, India, the Philippines, Malaysia, where the revenue per user is measured in pennies. So there's a lot of news about growth. It's really about user growth. Revenue growth is really poor. Yet what's always been true throughout the history of the business and what has been constant is really excellent consumption by fans on music. It's always about following the shifts in consumption and monetizing that properly. So, first it was in the 90s and before it was record stores, and then it moved to iTunes, then it moved to streaming, and really where a lot of the usage and consumption is moving to, especially with younger users, is on user-generated platforms, TikTok, Instagram, Snapchat, and to maintain that growth in revenue, consumption is growing, is the music industry needs to, like with YouTube, remember there's a day where YouTube launched for a long time where they're not paying for the music. And the industry said, we're going to sue you out of oblivion. And they said, no, wait, we will pay you on a per stream basis, like a streaming service, so that we can use your music. And that's what's going to happen, which will shortly happen, assuming TikTok doesn't get banned, which is, I actually think is a real risk. But all those platforms I mentioned, Twitch, TikTok, et cetera, the industry needs to establish licensing deals with them. And they're both in a mutually needed situation. They need music to drive consumption because TikTok just did a test in Australia where they took major label content off the platform with the hope of building leverage against rights holders when they got to negotiations. Well, guess what happened? Usage and consumption went down on TikTok. So that blew any leverage TikTok has, and they're gonna have to come to the table and pay for usage. The other thing though, which is, so we talk about that, which is manage that consumption. The other is in the traditional consumption channels, radio, streaming, iTunes, et cetera, there's already money being left on the table because the thing that amazes me every day about the music business is that we're mostly dependent on our customers and the users of our content to tell us how much they're using it and then paying us instead of having meaningful third-party verification. So I'm working with technology companies that are helping to measure consumption and basically collect that money when in fact it's not even being paid out at all in the first place, either because the licensee just is missing it, or in some cases it's willful. So there's, that alone is leaving about $5 to $10 billion on the table just on misconsumption. And then on the consumption that's not being monetized at all, we're talking about an incremental revenue of several $billion a year. So it's not like we have to create new business models to continue the growth. It's about going where the consumption is and working with those platforms to build a business model, because all these platforms have shown that they need music and artists to thrive and grow. And so the industry now, whereas in the decline of the industry in the 2000s, the industry didn't know how to approach technology and kind of almost gave it away, and they realized, wait, we have the scarcest resource, which is star artists and hit music. Today it's TikTok, tomorrow it's gonna be somebody else. These tech platforms are commodities. They need stars and the music to monetize their pipeline. And so that's really critical to maintaining that revenue growth is properly licensing and monetizing all those channels.
I just wanted to comment with all these fabulous new streaming platforms and all these different ways of consuming that on a weekly basis, 82% of everyone in America listens to the radio, and less than 50% listens to all streaming services combined, the highest being Spotify. And that most of these services, with the possible exception of YouTube, usage is down over the past 12 months. So it's, there's no question there's money being left on the table, but, there has been a tremendous explosion in the different services, and the consumer has been a great beneficiary of it. It hasn't necessarily been a better business. Obviously, to this day, Spotify loses billions of dollars a year. So, to some extent, the artists and the performers and the writers that have been getting tremendous amount of money from some of these streaming services, there's a question of how long that's sustainable, because these services continue to lose billions of dollars.
Well, it's also a question of what is actually flowing through to the artists and writers. And maybe I'm going to ask Tiffany and Shep to talk about that, as you represent a lot of artists. You are a writer and a producer and artist. And so just, an average play on Spotify, for instance, generates less than a half a penny for all of the owners of that recording and copyright. And so once you start splitting that down between the music, the owner of the recording and the publisher and whatever, we're talking it takes a lot of streams. It takes a lot of streams, and it's so the numbers are actually kind of kind of startling. I have a couple here. 42% of the 158 million tracks on Spotify, or that's 66 million tracks, were played less than 10 times last year.
38 million were played zero.
What?
38 million tracks were played 0 times.
Oh, I was about to say, I was literally.
There's
gonna follow
actually a
that. You-
website
you-
called
You took my
Forgotify.
line. 38 million songs were never played. So I want to talk about that and the increasing congestion and where that's going. But first, if you guys, either one of you can start by talking about how does it get to you?
Yeah, I'll say there is a website called Forgotify, which is basically you can go on there and be the first person to hear. Like you could be play number 1, and then when you play it, it then goes off the website. So that's how many songs are out there that have no plays. Regarding the money, I feel like I'm on both sides of this because as like a songwriter, artist, creative side of me, the guy in the band back in the day, I don't really care about the money, right? Like that part of me is like, wow, TikTok's using my song, or like MySpace or whoever. I just want the music out there. I want people to hear it, right? Then there's the business side where you want to, you want the money. So I mean, I've heard people say, we're not doing it for the money, but make sure we get the money. You know what I mean? Something like that. When I put out a record independently, we probably make about little less than $5,000 per million streams from Spotify. And that's on the master side mostly, for the most part. The publishing side's collected differently. But when you independently release a record, you can make $5,000 per million streams roughly. And again, there's this whole new middle class economy now, right? Like that's something that we couldn't do back in the day. You could sell vinyl out of the trunk of your car and hope to make a little bit, maybe make your money back and maybe do well enough to get a major label or a record company to come along and say, we want to sign you and give you an advance. But the idea of being able to put music out and monetize it continuously never really existed, in my opinion. So in that regard, I love this world we're in right now. Like I love having records that are going through major labels that, have tremendous success in that regard. And now I can put records out that have less success, but I make a good amount of money off it. You put out a song independently, it does, 30 million streams, do the math, right? Like, so that's a very empowering thing for young artists and independent artists, in my opinion.
Yeah. As a writer, though, you are, in the days of CDs and cassettes and vinyl, a writer would get paid the same for having the 10th song on the album as the writer that wrote the hit single. That's no longer the case. That's because there was a mechanical, that's called a mechanical license. It's a, it's a government maintained license, and it was 10 cents or whatever it was per track. But today, the 10th song on the album isn't getting streamed at all. So doesn't that put more pressure on you to write the hit song, not just have a song on an album?
I think it's, again, it's kind of catch-22. Getting a 10th song on a hit album in the 90s was super hard. Like, it wasn't like you could just write a great song and it ended up on a record that sold millions of copies. Like, that was super difficult to achieve. So yeah, if you had track 9 on, a record that sold 3 or 4 million records, you probably made the same amount of money as the guy who had the hit, at least on the sales part of it, not publishing wise. But now there's so much more opportunity to release music that has success. Right. So for me, my game is not write a song and try to get a major label to put it out. Like in many cases, I don't really want the major labels to put it out anymore. I'd rather put the record out myself, let it kind of proof of concept, tee up, do well, and then maybe, do a deal from a point of strength with a label after the fact. But
Yeah, I think I do want to talk about that, but before we go on to, sort of the state of independent artists and who's signing to labels and why or why not, I just wanted to ask Tiffany to comment on with your clients and this economy that we're currently in, and we'll also talk about a lot of ideas that are now coming forward about how to make it more equitable. Before we finish up, but how are your clients? How are they responding to this economy and the world of actually beyond just the economy, but now the artists have a lot of pressure to create content for social media, in some cases on a daily basis, to try to keep, and that's not necessarily the strength of an artist. It used to be an artist could just go off and make a great record and then tour on it. Now they've almost, they've got to keep a presence going. It's not like if an artist disappears for 2 or 3 years, the fans, at least today's younger artists and younger fans, they're gone to something else.
Yeah, it's fatigue for sure. With the short form video models now, at least you don't have to spend a gazillion dollars doing a long form video, but then you have to, you're always trying to see what the next thing is. And if you're not continuously, populating everything and like fan engagement and everything else, you do yourself a disservice for sure. Literally, the whole TikTok thing is, I just want it to go away. Because I have clients who are songwriters and producers, and their publishers are coming to them and saying, here, why don't we put you in the session with this TikTok artist who's like blowing up, who had this viral video, and then they're in the corner of the room with a selfie stick, and my producer's like, what am I doing? This is so ridiculous. Like, I don't know. But yeah, the money flowing through, that's a whole thing. That's a whole, we get to do a panel on that specifically, but thank God for the MLC, honestly. The blanket licensing for digital mechanical, the MLC is paying directly, and if you're not published, you can sign up directly with the MLC and get paid. So generally, if you're signed with a publisher, the MLC is going to pay the publisher is going to take their 25%, and then they're going to pay through to you the rest. But if you're not published, you can just get 100% of that direct, and all you have to do is sign up. And that's for streaming if you're a songwriter. So that's really important. And then it's always important to have a good lawyer to make sure that your streaming income isn't based on this archaic royalty system where you're getting 17% of your streaming revenue. And I mean, I could go on and on, but that's part of it.
Thank you. Jeff, tell us where radio fits in today. Can radio still break artists, or is radio following what's happening on social media?
Well, I'm glad you asked that, Dick. Outside of YouTube, there's for people who say that music is important to them. More people are influenced by radio than any other streaming platform. I'm higher than Spotify, and not only is it very important for breaking new music, but very, very important for amplifying music that people have been exposed to. I think that I can look to artists that come on the radio and artists that perform for our audiences, that come and do acoustic sessions. And the other day I was listening to Star 99.9, and Rob Thomas was on for 10 minutes being interviewed, just because he knows it's important. I was at a fantastic show of recently locally of American authors, and I got to meet one of the great songwriters of our time there, and he could tell you how important radio is to him. And for anyone that's interested, one of the great radio shows in America is on tonight.
It's on 8 o'clock on two of Jeff's stations, 95.9 The Fox and 94.3 The Shark. I do a show before I got involved in any of the stuff, called Playlist Junkie, where I play a lot of songs, but sometimes I'll pump the music that's in our catalog just for fun. But actually, maybe I'll echo what Jeff said. We were talking about it in the green room. Radio is still a very important part of distribution, and so we have a song on our catalog by The Weeknd called "Die for You." It was on the Starboy album released over 6 years ago. That was a kind of a middling song on that album. It got hot on TikTok, and the label, The Weeknd's label, started pushing it at radio. And radio really propelled the song. It got so hot on radio that The Weeknd did a remix with Ariana Grande about a month and a half ago, and the song went back to #1 after 6 years, sort of a 6-year-old song going #1. So radio is still a critical component of distribution, and it's where really people in the country listen to more music. They listen to more music on radio than they do on streaming services.
Yeah, not only, as I mentioned, that more people listen on a weekly basis, but if you added up all the streaming platforms combined and including podcasting, more hours are spent per week with radio than all of them combined still, despite its long discussed death.
It's still the validation of a true hit too, right? Like at the end of the day, you could have a streaming hit and make some money and maybe have popularity, but until that song's on every radio station in the country, is it really a hit?
Well, now, Jeff, we just...
Monetarily, yes, and popularity, yes, but there's something about it.
But I think the thing that's been implied throughout is that radio is not starting artists the way they used to. Is that the artists are, and by the way, empirically, there's almost no discovery on streaming services. Spotify, Apple Music, or digital jukeboxes. They overstate their role in discovery. Most of the discovery is happening on social media. And what radio has done, which unfortunately I think is going to cause them problems with younger generation of fans, is they're less focused on discovery and more focused on scaling out songs which are bubbling under on social media and streaming, which is where the younger listeners are. So they don't really view radio as something that they need. And my concern for radio is everything Jeff is saying is true, but have they lost a generation of listeners? And because the limited statistics I'm seeing is that the under 18 crowd and maybe under 23 crowd are really not tuning into radio the way older generations are, because they are on those platforms listening to music. And so for me, I want, and what I want as both a fan and a member of the industry is radio to do a better job of engaging in discovery and helping expose new artists to fans. Now, what they're doing in this model is exposing their fans to new artists, but they're artists that have already been exposed to younger listeners, and they're really going for what you would call the lean back crowd. Folks who are not really looking for music, who want music to be delivered to them, which is fine. That's how you fill arenas and stadiums. But as someone who's trying to break and develop artists, radio just isn't generally interested in playing the role it used to. They've kind of abdicated that to social media and the streaming services, which is what it is. It must make business sense for them, but it's
and I would say in the day, an artist would show up at a radio station with their demo and beg to get on the air. I can tell you, I have not heard of recent years of anyone showing up at any of my radio stations or any of my compadres' radio stations saying, please give this a spin. Doesn't happen. And so, it's true, radio does not break artists the same way. Media, there is nothing is the way it used to be. There's a tremendous fragmentation, and there's no question that there's less risk-taking with highly profitable companies. Spotify doesn't take a risk when they want. Spotify, if you want to get on Rap Caviar, you can get on. You pay $50,000 a week to get on Rap Caviar. Radio stations can't take that money; it's against the law. So, but if there are any aspiring artists out there that want to get their music broken, or their moms or grandparents or cousins of anyone, you make sure you get in my hand. My office is right here. And when any post roadies come up and bring me a demo, and I'll make sure it gets a listen. All right.
All right.
I will add to that, saying that I still send new records out to a half a dozen or more DJs at stations. I have like tastemaker stations all over the country that I still know may play the record. I know labels are still watching those tastemaker markets, sort of, and I still think it's important.
One of the things that concerns me, and I think a lot of people, is that to use, if I could use the term, the TikTokification of the charts, that we're getting a lot of one-off. We're getting a lot of one-off hits by artists who, blow up with one song, and then the record companies throw all kinds of money at them, and there's no there. There's nothing after that one song, and you basically never hear from them again. And it's starting to accumulate in terms of the label's A&R budgets, and occasionally, a little Nas X will come out and be for real and have a real career. But for every one of little Nas X, there's about, maybe 10 others that they come and they go. So, are we going to see a shift back towards real artist development, which means committing to 2 or 3, you sign an artist or, that has writes great songs and you're going to commit to for years, as opposed to, we'll just throw this up against the wall?
I mean, maybe I'll take that. I mean, I think the industry, it's harder to break new artists right now. Catalog is taking significant share from new music. And part of that was pandemic related. It was a little, I think during the pandemic, hard to go out on tour, hard to break new artists. As Jeff said before, the fragmentation is real. And so what the labels are typically doing is they are taking, small risks on a number of artists, effectively throwing things against the wall, seeing what stick, and the ones that stick, they'll get behind them and they'll put more money to work. But they are definitely losing sort of the, they're losing, there are so many other financing sources for artists out there that the labels they're losing the importance. Their importance is going down versus what it was, because people are breaking on TikTok, they're breaking in all these other social media networks, that it's become so much more challenging for them. And Olivia Rodrigo was like sort of the latest big artist to break. That was 2.5 years ago. You haven't seen sort of too many other major artists break, and I think it's a function of sort of maybe a distracted audience.
And there's 100,000 new songs uploaded to the streaming services every week, and
it's every day.
I'm sorry, every day, and everyone's making a TikTok, so it's getting harder and harder to actually get noticed. We're talking about. This is another statistic I happened to read that I found really quite extraordinary, but basically I think it's somewhere between 1/3 and 1/2 of the tracks that are in the music services have been uploaded since 2020. Think about that. Think about the history of music. It's at least 1/3. I can't seem to find the number. 1/3 of the music that's available to stream has been uploaded in the last 2.5.
I mean, but one of the things that, again, I'm forgetting just the pure business of music. The other day I was in my car and I was listening to Yes, Close to the Edge, right? And I'm thinking to myself, like the experience of an album, of like that was meant to be played as an album, that that it stands up together. There's a story to be told, and that the stuff that I fell in love with when I was starting to listen to music, that's really lost. And it's like the quick bite. It's the cute little dance. There's not the same thing in artist development. People aren't buying albums, and that to me, that is such an issue from my perspective. If I were an artist, there's no such thing as creating a complete piece of art anymore that's being consumed the way that it's meant to be consumed, and that's a huge loss to this. That's as a result of the explosion in streaming, I think.
Mm-hmm. Totally. So just to stay on the track of how much music there is to pick from. That's going to get even more so, because the elephant in the room that I want to ask the panel about now is artificial intelligence, AI. You can now create music using AI, either from scratch or just using it as a basis to work off of. There are plenty of services online that allow you to do that. And you've probably been reading about all the other AI implementations that are going on with search, chat, GPT, and everything else. So we're potentially looking at, an increasingly vast amount of music that's going to be uploaded, and some of it's going to be uploaded via AI, and it's going to be like, you're going to be able to go in and say, I want to create a song that kind of sounds like the Led Zeppelin, and it'll spit out, you'll give it some parameters, it's going to spit something out that sounds like Led Zeppelin, which you can use as a basis of your recording, but that AI is trained on Led Zeppelin's records. And so there's an enormous controversy within the industry about what does Led Zeppelin get out of that? If somebody creates a composition that's based on training data that came from Led Zeppelin and then puts it out under their own name, what is that training data licensable? And that's anybody who wants to comment on that.
I'd just like to pipe in here. So remember that, so two things. To answer your question directly, let's forget about AI. Let's think about a musician. How do they learn how to write and play music?
Right.
They listen to other artists. And what's the name of that crappy band from Michigan that's huge that sounds like Zeppelin?
Greta Van Fleet.
Greta Van Fleet. It sounds like all they did was listen to their Zeppelin records and make shittier Zeppelin songs. Excuse my French. And in reality, AI is ultimately limiting because what AI does, very simply, it's pattern recognition. You show it songs and it looks for commonality and creates a new song. So the music AI is creating is inherently derivative. Forget about copyright issues, that's a more complicated issue, but people say there's a lot of crappy music out there. There isn't. There's actually a lot of good music, but to succeed, you need great music. And great music is more than the sum of your influences. It's 1 + 1 = 3. They listen to Zeppelin, they listen to Aerosmith, and you know what? I hear the influence, but it doesn't just sound like them. It sounds like something whole and new that is created. So the people who are in trouble from AI are people making basically elevator music, background music, production music. I'm a wedding videographer. I don't need Led Zeppelin. I can't afford to pay for Led Zeppelin in my wedding video. And by the way, no one's buying my wedding video because I can get Led Zeppelin. So if I can get something that sounds like it, great. The other thing that people are forgetting about is people still want artists. I'm not just saying about from a creative perspective. They want a human being. And I always say when I work with artists that the best music is music that kind of flows from them. And ultimately, what people really want is the music is just a means to connect with the artist. That the artist, the careers are built around someone believing in that artist. Like I always talk about Radiohead. Like Radiohead could do an album of whale farts and it would be huge and people are like, it's my fault, I don't get it. Because Radiohead are geniuses and I need to keep listening until I figure it out. And so I think where AI would become scary, which I think is a long way away, is where AI can listen to all that music and create something that isn't just the sum of the influences, where it can listen to that music and say, okay, I'm gonna add the creative layer that the whole is greater than the sum of the parts, which is a long way from happening. I don't want to comment on the legal concepts because it's an interesting debate, but I'm not concerned about it, that AI taking out The Weeknd or taking out Maroon 5 or taking out Eminem. I'm concerned for the people scoring films and creating background, what's called production music, because they're not creating anything great or original. They're basically musicians who can't make a living creating original music for themselves, so they're writing jingles and writing this production music. Yeah. So I'm not as Pollyannish as everybody else is, because you're basically want the AI at that point to, in essence, it has to be somewhat sentient, which is, I don't know if that's going to happen in our lifetime.
I think David's spot on there. So last year, I led a round in a company called Boomy, which is a generative AI music company. There's a young lady in the background right there, Zoe Hendel, raise your hand. Zoe has a song on Spotify. So she made a song using the AI and also her editing and her voice and some human influence. And this company and others have put millions and millions of songs on the streaming services. Now, most of these songs aren't listened to very often, but there's a lot. I mean, I think the cat's out of the bag. Like, this is Pandora's box. AI music's here to stay. The industry hasn't figured out really how to coexist with it yet. It will figure that out. Right now, a lot of the AI is doing generative using effectively sort of pre-cleared tracks. The industry is not letting them use the music of The Weeknd or Led Zeppelin or Maroon 5. There's a big legal question whether it's derivative work, and that's I'm not smart enough to figure that out. But I think the likely outcome is that the industry figures out a way for that music that's using the Talking Heads or using Led Zeppelin, that they'll credit the original songwriters and sound recording as a partial writer of the new works that get generated. It's tricky. The labels are going to fight it for a long time. It could take years to resolve, but that's probably the outcome here. But there's a lot of really interesting music. I agree with David that it's going to take a long time to have the human curation, like the human element of this is still critical. The relationship between a fan and the artist is not going away, and AI really can't supplant that. But it is going to supplant Epidemic Sound and other production music generators. They're also using it. The good thing is they can potentially lower their cost by using that. By using the AI, and there are actually a lot of major producers who are using AI. Shep, I'd be curious your view, who are using AI, especially in hip hop, to generate beats. They're using the AI to generate the beats, and then they add the human curation and the human sort of touch on top of it.
So yes, in every session I go into in the last few months, there's someone with a laptop open using AI. And we're still at the phase of like laughing about it, like, what are you doing? Put that thing away. Like, we don't need that. And we kind of play with it. And to me, it's really about who's controlling the AI, because like kind of what you guys were saying, like, I don't think anyone could just go on there and type in, make me a song like Led Zeppelin, and it's going to be good or even listenable. It might sound like, might resemble like certain elements of it, but it's not going to be a great song, at least today. But if you're using it like as a tool to like kind of...
Well, they use it as a starting point.
You could use it as a starting point. Mostly what I'm seeing is mostly lyrics. So like we could write a song, you could say, hey, throw that verse into, ChatGPT and say, make it cooler. And it does, but it makes it cooler in like a corny way. Like we could have did that ourselves. So I haven't seen it really be amazing yet, but I am seeing everyone using it. And the majority of the stuff coming out of it is pretty below average. So I'm not really sure it's there yet. And I also look at it like the Wild Wild West, as far as it's the same thing with sampling. Like back in the day, like when sampling was brand new and nobody knew like the legality of it, like, who we have
Yes,
to
it
pay,
is a
can
lot
we
like
use it?
that. The early days of sampling.
And the same thing is when people, you give a sampler and some vinyl records to somebody who's terrible at it, it's going to be terrible, right? But if you give it to someone who knows what they're doing, they're going to create music that's incredible. And then people will ultimately start getting paid, the original copyright people, interpolation, samples, all that. So I think it has a future. I don't think, I don't know if this is a good analogy, but I don't think like mathematicians were threatened by the calculator. You know what I mean? It might have been a weird thing initially, but yeah, good, thanks. I feel like that's kind of what it is and could be eventually.
I want to talk about new models, both new models for monetization. Sam has already mentioned one, and I'll let him tell you a little bit more about that. But that are available to artists and writers that are that allow fans to invest actually directly in the artist or writer's compositions or recordings. And then also about, we'll finish up with talk about new models for royalty compensation that are being discussed within the industry, because today's model is that, well, we'll get to that. Let's start with new models for monetization.
I have one thing that I want to say, because I just saw this recently. Has anybody used Indify?
What's
Yeah,
called?
I have. Okay, so I haven't signed up yet, but it's basically like Tinder for investors who want to spend money on cool artist projects. That's a good one.
Yeah, I
Wait,
know.
what's,
I feel
what,
pretty
could
well.
you say it again? What's the name?
Indify.
Oh, yes, I've heard of it.
Yeah, it's basically, it started out as more of a like a NASA concept to find, scraping the internet and finding artists that were taking off independently. And then they essentially, because I remember them way back in the day, I used to have an account and you could go on and see like who's blowing up on YouTube or who's doing this and kind of follow all the metrics. But then I guess to monetize, they switched it to, here's this artist that's blowing up, here's their numbers, here's their streams, they need, 20 grand to make videos, buy a van and go on tour, and here's a deal they're offering to you. Like if you give them that money, they'll give you X percentage of whatever, so.
Right.
So.
Yeah. Go ahead, Sam. Tell us a little bit more about this project because it's not live yet, but it's going to be soon.
Yeah, I mean, I think in all these things, Indify, like it kind of goes hand in hand. The industry's looking for new ways to figure out models, especially for artists that, streaming doesn't pay, for especially emerging artists, streaming really doesn't pay the bills. They make most of their money touring. But going back to sort of the deal that we did about 2 years ago to buy this, quite a large catalog, we sort of had this idea that if we can find a model that can effectively take ownership of the song, partial ownership, and get it into the hands of the fan, that could be a really great business. And we thought that we were actually going to partner with one of the companies that was already doing it. There were a few companies, especially on the blockchain Web3 side, that were, one in particular is called Royal, where they were effectively, having an NFT that you can buy a piece of a song. We went pretty deep with that company and a few others and kind of couldn't get comfortable with what they were doing on the regulatory side. I think our view is that if you're selling a cash flow for an artist, it's a security. And that the only way to do this was go, really embrace the regulatory, do this with the SEC. Ended up starting our own company. I brought on a guy, our CEO is a guy named Scott Cohen. Scott founded a company called The Orchard, which is a very big music distribution company that he ended up selling to Sony about 8 years ago.
They are the biggest independent distribution company in the world.
Yep, they are. And the model that we're doing, we're starting our catalog. We have about 2 billion of catalogs, so it's a very big catalog, but it's also small enough to be neutral. So we're taking our catalog and sort of partnering with a bunch of other large catalogs and also a number of artists to not take their copyrights, but take royalty streams. So I can take a piece of Counting Stars by One Republic, take 30% of the royalties that we receive for that song, either the masters or the publishing, which we have both in this case, and sell them to the public. So effectively do an SEC registered security. There's a model that was sort of formed under the Jobs Act about 10 years ago called Reg A, which allows you to do effectively a mini IPO. So treating these songs, which are consistent cash flowing songs that have somewhere between 30 and 70-year lives to them, that they're still paying copyrights, and getting them into the hands of the fan, and doing that in a way that protects, that's regulatorily sound. We're effectively doing a small premium to where catalog trades right now, so there's a benefit to either artists or catalog that they can sell here. And one thing that we found sort of in doing this, we're really starting with our catalog as the base, but in the conversations we've had with artists, it's been really exciting because this is a way for artists to monetize their catalog without giving up control. So instead of selling their entire their copyrights, they can keep their copyrights, sell 20%, 30%, 40% of their songs, get a big monetary benefit, and then have their fans own a piece of their music. And what's happening right now, which we're quite excited about, is the fans are already using major artist music. They're using it on TikTok. They're using it on YouTube, and it's called UGC, user-generated content. But these are live assets. The fans are doing things with these assets, and we think partial ownership allows the fan to feel more of a sense of connection with that artist. What we're also doing that I think we're really excited about is a lot of these artists that we have in our catalog, they sold their catalog never expecting to get another dime from it ever again. We are trying to create another long live revenue stream for artists. So One Republic, for example, we're taking parts of their catalog, selling it to the public, and then every time one of those securities trades, our platform, which is a regulated marketplace, is taking commission from those trades. we're taking part of that commission and giving it back to the artist. So effectively creating an artist foundation and making sure that we're really, one, creating a great value proposition for the fans, but also creating a value proposition for artists to make sure that they have this other revenue stream to get paid. And it's another long live revenue stream. And we've had a lot of, really exciting kind of interaction with a lot of the artists in our catalog, and even outside of that, for artists who haven't even sold.
Thank you. The other model I thought we could talk about for a minute is the model. Today, when you go on a music streaming service and you hit the play button, it's one play that's aggregated with everybody else's plays and then is accounted to accordingly. So the question, and there is an increasing amount of music that's being uploaded to the services that is, they're not even artists, they're sounds, they're sleep this, they're bot farms that are working this system, and also, by the way, anytime you listen to something for more than 30 seconds, it counts as a play. So you actually have bad actors basically that are creating 31-second loops and that kind of thing. So why do I even bring that up? The question that's now become very much forward in the music industry is how this model of pooling everybody's music, which has been going on since the first music subscription service launched, is not really working anymore. And to use an extreme example, for instance, if I listen to nothing but Metallica all month long, shouldn't Metallica get the majority of my $10? Basically, $7 out of every $10 that you pay to a music streaming service goes to the rights holders.
But what even more importantly is that Metallica is one of the top artists. They're going to get paid more than an unknown.
Yeah, that maybe isn't a good example. A better example would be what if it's an indie artist?
So an unknown artist, for example, at the end of the year when you get your Spotify, like you're in review and this is who you listen to. It was me listening to my one artist, the most streams ever. She would have made a lot of money if the model was that on a prescription basis, the user, me, the listener, pays what I'm actually listening to, as opposed to market share, which is what it is now, where just the biggest artists with the biggest streams are getting the most money.
Right, so the point would, this user-centric concept for royalty calculation would be very simple in a sense. It's like everybody's month of play data would be paid out accordingly, and as opposed to it being pooled with everybody else.
Well, I think one thing we're seeing a lot is super fan platforms. That there are platforms where a fan of especially independent artists can have a deeper relationship to that artist. So exclusive content and sort of a monthly subscription where if you love a band called Cigarettes After Sex and that's what you want to constantly talk to the band, talk to them in their dressing room, have sort of exclusive content, you can go and pay them on certain platforms. And that's, a way to tap into the sort of the excitement that people have. Because, on the streaming services, yes, it's more of there are a lot of casual users who are listening and they pay on that market share perspective. But there are other models that people are exploring, especially those emerging artists.
The question is, it's totally fair and logical. So why hasn't they switched? And and this is unfortunately the nature of power in the music industry. Spotify doesn't really care because they make the same amount of money where they use user-centric, what's called platform-centric.
I disagree though, because maybe the majors wouldn't.
Well, no, that's the other part of the equation, is that the majors who have the most power over the streaming platforms, they disproportionately benefit from it because, make a long story short, the smaller artists are subsidizing the larger artists. So you could actually calculate, and there's an inflection point where you go from being disadvantaged by the platform-centric user model to being benefited by the platform-centric model. And not coincidentally, those artists that benefit tend to be exclusively the domain of the major labels. So externally speaking, it wouldn't be fair, but Spotify doesn't really have a dog in the fight, and the major labels who are the kind of really expressing a lot of power here, economically don't want it to change. So unfortunately, my guess is it's not going to change anytime soon. Some of the smaller platforms have already started to do that, but they have such a pennies in the bucket share of the business that it's not going to be meaningful. Even with Apple, it's not going to be meaningful until Spotify does it, and I candidly just don't think Spotify cares.
There's one area though that I think is going to change pretty soon, which is tiering. So Lucian Grange, who's Universal's chairman, is sort of probably the most powerful person in the industry, wrote in his annual letter, going after that problem, Dick, that you mentioned, the 30-second bots and sleep music. So some people will sleep with music, and they listen to these 30-second tracks that play over and over and over again. Should each of those tracks pay the same as listening to Sugar by Maroon 5? Probably not. So I do think there's going to be a change in tiering, and that will benefit the independent artists as well. So that's there's a kind of consortium of independent labels called Merlin Independent Distributors that is part of that discussion about making the chart song or a real artist song get paid more than the mood music that sometimes people listen to.
I mean, this is still, early days, right, for streaming. I mean, you have Spotify, which loses billions of dollars, right? And their competitors are Apple, who doesn't care, right? They don't care about losing money. It's nothing.
But neither does Amazon and Google don't care
Same
either.
with Amazon, right? So one is selling devices, some are selling devices, some are selling information, some are selling advertising. It's early days. They're all losing money, and the consumer has benefited tremendously because they're getting, for $50 a year or $100 a year, they're getting unlimited access, whereas that was a tiny amount of what they spent in the old days when they were buying records. And it's early days. It's not sustainable. And that you pointed out that when big artists withheld their content, that the streaming service suffered. You pointed that out earlier. So if that's the case, then the model where the big companies that are benefiting disproportionately, the pendulum will shift, will swing, and that will come back. At the end of the day, the biggest question to me is do the economics make sense? Are they sustainable? And from my perspective, they don't. Right, that there's less money being spent by consumers for greater choice, and that sooner or later, the free lunch, someone's going to have to pay for all the free food.
Well, I think it's very clear that all of us, everyone, is paying too little for music. The $10 a month Spotify subscription is the best deal in the world.
They haven't raised their price since they launched a decade ago.
That's correct.
If you have Netflix
they lose money anyway. They would have to, when they start, it's not scalable, because if they charge $25, the artists make more money. That model is broken. Eventually, it's the sound exchange and the ways that these guys are monetizing, that's going to have to change ultimately.
But this year, there's going to be, so Apple and Amazon have already raised price this year. I think it's probably going to be around October. Spotify is going to raise price by 10%. So everyone's monthly will go up by $1, and I expect that to actually continue to go up over the next few years. So this is the first price rise we've ever seen in streaming has happened in the last 6 months.
And Spotify's losing money because they're choosing to lose money. So let's just keep in mind that when you sold records to Tower, when you went to Tower Records or HMV, it was a 70-30 net profit split. The retailer kept 30%. When you sold music on iTunes kept 30%. And when music is distributed on Spotify, they keep 30%. Spotify, I don't want to get too much in. Spotify has bloated overhead, they're overpaying their staff, and they're investing billions of dollars in podcasting, which is not even a drop in the bucket of consumption. And they're investing in growing the business in markets where they're just not, doesn't economically make sense, because they sold Wall Street on two stories, which is self-inflicted. One, growth. So they have to keep going for new users, even if those users are generating pennies instead of dollars. And the other is we're not trying to be the biggest music streaming service. We're going to be the Netflix of audio. So they had to lean into podcasting, and they're starting to lean into audiobooks, and they're over-investing. So the issue is not that their model isn't sustainable or Spotify, is that they are not candidly being smart about their business, including not raising their prices. Because they've already tested a price increase in Australia and New Zealand, and they had no churn. But Daniel Ek, who I think is not the guy to be running this company going forward, is just stubbornly refusing to raise prices, and it's driving everybody nuts.
But right now, their model doesn't scale, because every dollar that they raise prices, proportionate amount goes to the artists and to the labels. That's the problem. It doesn't scale.
Still get for every dollar, they still get 30 cents of it.
Right,
So
but I mean, it doesn't
they get
scale.
incremental revenue.
And they're losing money in podcasting. Podcasting is the actual listening is down, right? It's down, and they spend $200 million on Joe Rogan. They've spent tens and tens of millions of dollars on no names, and that the reason was because their streaming music model, it doesn't work. And that's what they told Wall Street, is that if they got out of all their dependence on music and they went into the spoken word, that they could make money.
And the dirty little secret is they don't get any margin benefit from being in podcasting, because all the podcasting goes into the same pool that the music does. So the music rights holders get 70% of their podcasting revenue. So I don't know how they missed that, but they're getting no margin. They're always talking about how they're trying to raise gross margins, but podcasting isn't help. Audiobooks aren't going to help. It's all going into the same pool.
Yeah, they should effectively spin off their rest of their audio business and charge a separate subscription there, because they are really not benefiting. That's spot on.
Well, they're in the business of selling stock.
Right.
They've been very successful at that.
I think we're over our time. Do we have time for Q&A? Is that a yes?
Yep.
I can't
If anyone
tell.
has any questions, you can come on over to the mic.
I'll kick it off. I'm Ashley. I'm the social media manager here at the library, and I'm also coming from a music management background in Jamaica. Just moved back after 10 years over there. Can you guys maybe speak to one of our biggest issues, running like with Jamaican music and dance hall reggae specifically, is there's really no market for it, even though it's one of the most influential genres of music out there, in my opinion, and lots of music opinion. Just for example, like with Spotify or with Apple Music for playlist curators, we have like two points of contact, like iHeart Music or iHeart Radio has one reggae station that's a Hawaiian-based reggae station. It's not even a Jamaican radio station. So we're talking about a whole genre and islands music that's being largely ignored by the music business. Can anyone speak to that?
Can I take that?
Oh, go ahead, David.
I've had developed 5 platinum artists in my career. The first 4 were with The Machine. Partnership with Sony, Universal, radio, all the gatekeepers. The artist I managed just went platinum a month ago. We're about to have our second platinum record, if I can just deal with the certification stuff. That artist has never gotten a spin on radio, has gotten 0 meaningful press, never gotten an editorial playlist. Despite having 19 billion streams on TikTok, we've never gotten in a TikTok program. And the way we're able to do it is through marketing the lifestyle of the artist. And this ties into what you're talking about, is that, so when you say lifestyle, what does that mean with an artist? So it's inherently, what is the music about other than the music itself? So for instance, Jimmy Buffett's music, his music itself is about drinking on the beach and that kind of beach lifestyle. Sometimes it's the artists themselves. Jack Johnson writes kind of generic singer-songwriter stuff, but he's a surfer. So you market him to the surfer crowd. And then you have an artist that neither themselves or the music is about a specific lifestyle, but you say, okay, we think this music could appeal to that lifestyle. Skateboarders, fishermen, whatever. And I think it's a combination of stuff. I think it's, okay, who are the people who reggae and dancehall appeal to, and what else are they in? Because every music fan is interested in things besides music. So understanding what is the nature of the fan who listens to reggae and dancehall, what else do they like to do? And let's talk to them there, because even if there was a market in the mainstream music, There's 10 million artists trying to squeeze through those doors. So if you can define the lifestyle appeal of the artist, the other thing is quite simply is good old, blocking and tackling in digital marketing is either earned through talking to influencers to help promote or paid doing very, strategic, performance-based Facebook advertising and so forth to figure out, okay, these are where the fans are, or these are the people who have expressed interest. So my point is I've done it with all the gatekeepers, and when I say I've done it without, the artist really was the vision, I just helped facilitate it. But the point is, in this day and age, you can be a platinum artist without a record label, without the gatekeepers. You just have to understand how you can reach your ultimate audience without having muscle or huge dollars, and it can be through lifestyle and through being smart about digital.
Another angle I think that I'll mention is that I think one of the areas that we're going to see a lot of development in are genre-specific music services that'll have their own feel. Apple just launched a classical music subscription service, which is a big step for classical music fans because there hasn't really been one. And so there's no reason why there can't be genre-specific, really rich experience music services. So reggae would, and bring in the lifestyle brands to be associated with that service.
Sure. Well, just for example, we went from, in 6 years, we went from no followers to Grammy nomination, and our Grammy nomination wasn't even shown on TV because we're reggae. Reggae is it's one of the genres that just does not get shown. Even when we won a couple years ago with Coffee, who's like a brand new, huge Jamaican artist, Apple, beat massive artist, she didn't even get shown. It seems very specific.
Well, listen, reggae is just one of 75 awards that are given out before the telecast. So it's not just reggae that's being left out of the telecast.
The biggest, sort of crossover genre has been Latin. So Latin has crossed over to the mainstream. I think the next one is probably Afrobeats. That I think is likely to be the next big sort of, and this is, some music from sub-Saharan Africa, that is likely to sort of be more of a global crossover. I mean, I think in reggaeton, dancehall music, we have the Major Lazer Diplo catalog, and it's not reggae, it's more really reggaeton dancehall, but that particular group, it's Diplo and sort of a kind of a DJ collective, has done a lot to try to sort of repopularize that music. So I think the challenge is the labels are focused on the areas they're hot. They're not sort of pushing the great music as much as they used to. They're sort of trend following rather than putting a lot of boots on the ground in that area and signing local artists. And I don't know the reason why they're not doing it as much, but it's great music.
And hopefully Rihanna will put out that reggae album that she promised us 8 years ago.
We have another question?
Yeah, so maybe more of a statement, but also sort of a question. So, I come from a background, I guess, like you, Dick, when college radio back, hate to say it, 40 years ago. And there was a whole level of, we'll call them middlemen, right? You had the people that signed the artists, and of course, you had to listen to not just one song, but an entire demo. Then you had the college radio stations, and they would all independently listen to it. And I mean independent, we'd get records we'd never heard before. So if we heard a Devo record or Talking Heads or Ramones, that was totally brand new. And if we played that, we thought, look, I'm discovering this. And then, thousands of other radio stations were discovering it at the same time, and it got play. The whole idea behind streaming service was sort of more on the revenue side to democratize the fact that the artists weren't getting paid. But what it did is it got rid of all the middle people and this whole thing of, now we have freedom of choice. That's great for the artists because they could, bypass that whole process of the middlemen. But most people, I hate to say it, like Debo said, they want freedom from choice. Like you go online, I don't want to just look for a million cameras. I just want the one everybody recommends. And I think that's the issue. And you got to develop somehow, get these what drove the whole industry was new bands. And we totally lost getting these new bands some way to get played. And if they get played, then you're going to have, for the future, a whole new revenue stream instead of trying to get more money out of the existing artists.
Well, you're talking about trusted tastemakers were what you can call them gatekeepers, whatever. They were, and radio was one, and so were press. You know, a Rolling Stone review would get people to go find the record and go check it out. And there were, you know, MTV then became, you know, sort of a trusted tastemaker, trusted to the extent that that audience was interested in what they were playing at that time. But you're right. And then playlists, in this current era, playlists were sort of becoming the tastemakers.
The model worked.
But that is already over. The whole playlist thing is already peaked.
The model worked, but the revenue stream didn't work because the artists were not getting paid what they thought were their fair share to the record companies, and that's what sort of drove getting rid of the middleman so they could sort of, you know, but then by doing that, it just ruined the whole model. So if they just went back to the old model, in my opinion, but were fair with the revenue stream, because, you know, if I want to find something new, what are my kids listening to? They're sort of the arbiters of taste. I, you know, have no idea as an older person. So what, you know, my generation, we go to the comfort music that's like, you know, like WPLR every so often, you know, and that doesn't help revenue streams. You know, if I want to hear something new, which I do, how am I going to find that?
Yeah, there are a couple of platforms you should check out. One's called NTS Radio. So NTS is, you know, really fantastic curation, typically of newer, underground, very subgenre, you know, and then there's another, and we're looking at, I mean, I think I'm a big believer that Spotify and Apple and Amazon, they really stink. The algorithms, they are pushing the same songs that people like, that is in their nature, and we're going very deep on kind of that human curation side. NTS, we're trying to make an investment in, we're hopeful, and the other one is called Colors Studio, so Colors X Studio. This is a Berlin-based company that they have about 6.5 million YouTube subscribers, and if you follow them on YouTube, every week they'll have 2 new artists that they're breaking, very curated videos and audio, and I think those companies are going to do great because they're really awesome at human curation, and it's super, super hard in the algorithm to find new music.
I just want to say that, you know, I love new music, right? But I have to make a living, right? So if I can't play things that I want to hear or that I think are cool, right? I have to play things that people will respond to and will listen. The amphitheater, right? We have a fantastic amphitheater here in Bridgeport, right? We have clients all over, you know, all over the place that want to come to the concerts, and we have a box there. And the concerts they want to go to are like Steve Miller Band and Foreigner. Like, and you say, well, there's no one from Foreigner in Foreigner anymore. And they're like, we don't care, it's still Foreigner. And so it's like, I don't want to like conflate cool new things and even curation, and breaking new artists with like what many of the people really want, right? And so like, if I could make a living playing the coolest new music, I would. I tried it. I started a streaming station, which was the coolest thing ever in Brooklyn, and we had, and everyone loved it except for everybody didn't listen, right? Nobody listened, and like we would literally watch the streams, and there would be like, we have like 1,100 people now. Like, oh no, that was 11 people. Like, literally, and we had the smartest people in the industry and the best researchers, and it was so cool. And we thought it was terrific, but the people didn't. So at the end of the day, you know, what does drive a lot of this is what enough people care about, that if you aggregate them, you have a commercial enterprise. Because all these other things are like, it's, you know, when people come to me all the time and they say, can you play this? Don't you think this would be cool? Like, I love Bob Dylan, right? But like, that's why I have a CD collection or I have Spotify. I can't play all Bob Dylan all the time because nobody will listen. I'll be out of business. And then all these great theories about breaking new music. I have a radio station, the only 2 radio stations in this area that have reporting status, right, are the Fox and the Shark. And we might play 1 new song a week, maybe. And that's usually a legacy artist that has a new song that kind of sucks. but it's a new song from a legacy artist. So I just want to make sure that we don't just think that like the whole job of music is to like enlighten and to explore. If people don't love it and won't show up enough to actually listen and be passionate about it, it doesn't matter what I like.
Next question. Is there another question? Oh, I think we're being told to wrap. So let's give a big hand to this wonderful panel. Thank you all for coming. Okay, you're dismissed. Oh.
Real quick, don't go anywhere too far because right at 4:45, the hip hop performance panel video, you're not going to see anything like this ever. You know, we got originators in the building, so don't miss it. It's coming up at 4:45 right here.